Good morning, guys and girls, and welcome to this morning's video. So this morning I have three pairs on watch, and those are pound Swiss, Aussie Swiss, and euro dollar. So my favorite of the bunch this morning is pound Swiss. So let's break that down from the higher time frames and tell you what I will be looking for. So on the higher time frames, the things that stand out to me are that we have this long sideways range here, which is a characteristic of pound Swiss. It does move in that manner. We get the impulses up or down, and then we get a sideways correction. And typically, these sideways corrections can last for a very long time. Okay. The other things that stand out to me is I'm just trying to delete this, pressing the wrong button. So the other things that stand out to me are the fact that the origin of all of this move, okay, it was here. Okay, so the start of the correction was there. The other things that stand out are that we have a near miss to it, and we have another near miss to it, giving me a clue that will likely gravitate back towards that before either breaking to the upside and pushing down, which is what we see the majority of the time, or we will form a correction above it, okay, like that, and then push to the upside. Okay, in this instance, price did what it does the majority of the time, and it found its way up to that area, the start of the overall correction. And the clue in many ways that we were going to push to the downside is the fact that we have an ending structure. So we have a corrective move up all in all. I'm sure there would have been structure on the lower time frames, but on the higher time frames, we have a corrective move up followed by, at the very end, we have this reversal structure. Okay, I've not drawn that correctly, but we have the 1, 2, 3. You can even see to some extent a little middle section in there. Okay, the last leg tends to have momentum as the buyers get out of their positions if we're going to move to the downside. And then this would have confused a lot of people, because once it breaks above, in many people's handbook, this is going to the moon. Okay, this has become support. But what we typically see in the majority of cases is that price plummets to the downside. As I said previously here, something like this, when it breaks just below, unless there's been a change of sentiment, which we can ascertain by way of the correction. Okay, I'm just going to pause for a second, because usually those alerts that go off, there's one that's just gone off there on Aussie Swiss, which means that my prices at my area of value. Okay, usually these alerts cut out my vocals on these videos. So as I was saying, when we break below somewhere like this, for many of the bigger players, this just represents, from a business perspective, discounted prices. So the same is true on the flip side, a discounted price for a seller. Okay, unless there's been a change of sentiment, which we can ascertain by way of the structure. So then we have the impulse down, the correction, followed by the continuation. And as I said previously, usually we can measure these, and usually the continuation leg out of an impulse correction continuation is of a similar length as the preceding impulse, okay, which would take us down to here, which makes sense contextually, because this low is the retest of the back end of all of this. Okay, so that makes contextual sense. So the next thing I'm looking at is, what did we do at this low? Did we, are we going to potentially, I mean, it doesn't make sense for it to do so, but price could find liquidity there and then retrace to the upside. And then we're looking for longs, or looking to target this high maybe for a kind of larger correction like that. Okay. But what price did is it's consolidating below this low, suggesting that it did not find enough liquidity here to send it to the upside, and that this is just an impulse correction continuation to fulfill this impulse correction continuation, which has not yet fulfilled its move, at least not from a mathematical perspective, as I just showed you when I measured the lengths of the impulses. Okay, so you can see, if we just drill down, so we're correcting underneath. The clue that we would get a bit of a larger structure was all these wicks. Okay, I said yesterday we'd probably get a larger structure because of these bullish high tests. Okay, so the next thing I'm asking myself is, where would price likely pull back to? Well, it would likely pull back to this area. Okay, with this being the retest, of the back end of all of this. And then if we look at this on the 15-minute chart, okay, we have a little we have a little hook point sat just above, okay? And what has price done? It's near missed to it, okay? Which is exactly what I was anticipating. Feel free to watch my previous videos. And which is why I had something drawn like this on my chart. And you can see that does appear to be what's happening at this moment in time. So what I'm going to be looking for is I'm going to be looking for a 1 hour. Okay, so this structure is visible on the 1 hour. Okay, that's forming now. So this is therefore a 1 hour structure. I can see the structure there on the 1 hour chart. So what I will be looking for is I'm looking for this structure to complete. I'm just analyzing on the 15-minute chart just to give me a bit more clarity. I'm looking for a 3-touch 1 hour continuation or a 2-touch 1 hour continuation with a 3-touch structural approach. And then my rules are that I can look to get short with a 15-minute risk entry once a 1 hour candle has closed at or around this area of value, this hook point there, okay? And then I would look to get short, and then I would be managing this on the 1 hour chart, okay? I have an alert set just below that ray line. I would manage it, and I would be able to manage it down to this low for about 3.5%. And then my target would be, I would measure from the range, okay? And then I've got the wrong tool on there a second. Let's change that over. I was measuring something just before I went live. So I would set a take profit at this sharp hook point. The 90% rule at the 90% area of a range is typically where price can pull back deeply, even if it does continue in the forecasted direction. So I would set a take profit at that low, which is set just above the 90% area, which would give me something in the region of 7.5% to work with, and then I would trail my stop loss accordingly at the same time. Okay, so that is pound Swiss. So let's move on to Aussie Swiss, which is, if pound Swiss is moving to the downside, then Aussie Swiss likely will as well. Doesn't always work that way, but so that is pound Swiss. Let's move on to Aussie Swiss, which appears to have hit. There we go. I thought it would get to that area quite aggressively. So the time is 6:41 a.m. as I speak. So that is relevant to this entry, potential entry. So let's take that off the chart a second. So Aussie Swiss, one of the reasons this is lower down is because this is not as standout as pound Swiss. You can see the area of value is much more, it smacks you in the face when you look at it. Okay. So, but the same psychology applies. We get the clue that this was an area of value is that we get the near miss to it. Okay. We get people trapped into the sells too early there. They get washed out, and then we get the aggression come to this is what we call catching people the wrong side of the market. So now I'm seeing this just a bit similar to pound Swiss. So I'm seeing this as an impulse correction continuation to push lower, which would take us down to there. I've just cut through this wick because it appears as a wick on multiple time frames, giving me a clue that this is likely just volatility. And you can see once again we're consolidating below this low. So at this moment in time, unless price starts to break above here, then this is just an impulse correction continuation to push lower. And you can see that you can almost start to see the structure on the 4 hour to some extent. Okay. And there you can see, look at this. This is exactly what I was looking for. Okay. I wouldn't be surprised if this breaks to the upside just because of these wicks here, these bullish wicks. However, that you do have to remember that this is Aussie Swiss, and Aussie Swiss, if we just look to the side, it does tend to move like that. To some respects, you get these big wicks. Okay, so I'm not too concerned about that. So what I'll be looking for from this pair. So once again, we've left the footprint, and I said to you in a previous video, it might have been yesterday, that I thought we'd gravitate back towards here. So we kind of have the 1, 2, 3. We even have a little internal 1, 2, 3 within it. We have the impulse correction continuation. We have the middle section here. Okay, we now have a base. Price has formed a solid base. And so what I'll be looking for here is what I've drawn. Okay, so we don't always know exactly what it's going to form, but how it's going to form. But if we get a 3-touch 1 hour continuation or a 2-touch 1 hour continuation with a 3-touch structural approach, I will look for a 15-minute risk entry within it. Okay, we can see that starting to form now. Okay, so what I'll be doing when this when this 1 hour candle that's active at the moment closes, so it will close at 7 a.m. It is 6:43 a.m. as I speak. I will be dropping down to the 15-minute chart to see if I can get an entry on this. Okay, and and then I will be able to manage my entry, manage my trade down to here for something in the region of 2.5%. And then in this instance, I would measure the range again. So the range is from here to here. And once again, that's gone back to the other tool for some reason. I would set a take profit. If we just measure this, if we look at this on the 4-hour chart, I would set a take profit at this low. Once again, just cutting through that wick, and then that would make sense contextually. And then I would be able to manage that down to there for something in the region of 8.5%. Okay, and that would fulfill, most likely, that would fulfill this move. Whoops, what's happening there? Try that again. That would likely fulfill that move as well. Okay, so that makes contextual sense if we measure it from the break, because sometimes the volume that's been generated can dictate how far we go. That makes contextual sense as well. So that is Aussie Swiss. So looking the most likely to give us an entry by the end of the day, but we shall see. We shall see what price wants to do. Okay, so that is pounds Aussie Swiss. I'm going to check this at 7 a.m. to see how this 1 hour candle closes, and see if I have permission to drop down to the 15-minute chart to look for entries. So last up is euro dollar. So euro dollar, I was looking at this because yesterday we had this daily close here, this bullish daily close, okay? And I was just seeing this as a potential impulse correction continuation to push higher, okay, which would give us this parallel structure. And if we got up to that area, we were likely tapping into this high, or more likely this high, the start of the correction. One of the things that stands out to me straight away, though, is that we've moved down more impulsively than we moved up. Okay, all in all, it's taken less time to come down than it did to move up to this area. Okay, but I was paying attention to the fact that we had this bullish close, and we potentially caught people the wrong side of the market who got short here. Okay, and we could have been seeing that move that I was just talking about. Okay, but so at the moment, if we just drill down to the 4-hour chart, there's a bit more to dissect with this one, which is partly why it's lower down on the list. It's not quite as straightforward. So this could be because we've moved up more correctively than we've moved down. So the move down has been more impulsive. This could be this kind of structure where we get something like that, where we tap into there and then move to the downside, and then we get something like that. Okay, we get this impulse correction continuation to push lower to take us down to these lows. Okay, which if we just measured that would make contextual sense as well. Okay, but that wouldn't be ready by the end of the day. So the reason I'm not looking to get short on this is because that we're on the 4-hour chart at the moment. That wouldn't be ready by the end of the day. But because of that daily close, which has retraced more than 50% of the body of the previous candle, and we've got two big wicks there below price, which is buying pressure, this could be a move to push higher to complete that structure that I was just talking about. So where does the sell idea become invalidated? Well, the sell idea becomes invalidated once we break above this consolidation here. So if we break above this consolidation here, it's not looking like we're going to do that at the moment. But if we break above this consolidation here and we form a correction afterwards, that is the market saying, look, I'm not going to form a larger bear flag to push lower. I'm consolidating. With the bigger players are stacking their orders for the next wave to the downside, to the upside, because price did not find enough liquidity here to send it to the downside. Okay, and then if we zoomed out to the 4-hour chart, it would likely be all systems go. We would have retraced a significant proportion of this move, and then we could be looking for that long. Okay, again, I don't think this is likely, but it doesn't matter what I think. It matters what could be ready by the end of the day. Okay, so if we get a 1-hour impulse up above the area of interest, which is here, I'll be looking for a 3-touch 15-minute continuation or a 2-touch 15-minute continuation with a 3-touch structural approach. And then my rules are, if it's a 15-minute continuation, I can look dropped into the 5-minute chart to look for a risk entry within it, okay, or a reduced risk entry on the break. And then I'll be able to manage this up to this first inflection point, which I don't think holds much weight, for something in the region of 3.5%. We've then got 5%, 5.5% to there. And then what I would be doing, I'd be targeting here. And then I would measure the range, which would be from here to here. And that would take us up to here. And I would set a take profit at the 90% area whilst simultaneously trading my stops, because price can pull back deeply from those 90% areas, even if it continues in your forecasted direction. So my alert is triggered. So I'm going to set another alert. Or is it triggered? Hold on a sec. Nope, my alert is still there. I'm just going to move that slightly. So if my alert does not trigger, then there's no need for me to check this pair, okay? And that's one of the ways that you avoid FOMO, okay? Is by just setting alerts wherever possible and just letting price do its thing. Okay, you don't need to check the charts every 5 minutes. If you are checking the charts every 5 minutes, I always describe this as like if someone says to you, "Can you see that face in that cloud?" Or "Can you see that dog in that cloud, that image of a dog?" You'll look at it and you'll probably say no to start with, but the more you look at it, the more you'll convince yourself that you can see the image or the dog or whatever it is. It's the same with trading, right? If you're checking the charts every 5 minutes, you will convince yourself, if you someone that gets itchy fingers or trigger finger, you'll convince yourself, if you get FOMO, that you can see a trade that's not actually there, okay, according to your rules, and then you'll eventually take something, if you're that way inclined, that doesn't meet your rules, and then you'll look back at it and you'll go, shouldn't have taken that. That was a bit silly, right? So just set the alerts wherever possible and just let price do its thing. And if price is in the area where you can't really set an alert and you're just waiting for it to shape up, as is the case with, for me at the moment, with Aussie Swiss, then what I do is I just set a Google Calendar reminder to remind me to check this pair. Okay. For example, I would set a Google Calendar reminder to remind me to check this at 7 a.m. when the candle closes. And then I know, okay, if it's closed like this, then I can drop down to the 15-minute chart and I'll just make sure I'm within the vicinity of my computer, ready to execute if the entry presents itself. And that's how one of the ways you can help yourself stay disciplined. So anyway, that is Aussie. That is the 3 pairs that I'm going to be looking at today. And I hope you've enjoyed this video. And if anything shapes up and I manage to get an entry, then I will, of course, update you accordingly. And just one thing to touch on before I forget, one of the things I'm trying to do more of is switch to the line chart to see whether I can see the structure, okay? And you can see the 1, 2, 3, even on the line chart. That means that this is, more likely to be a reliable structure if you can see it. The line chart kind of factors out a lot of these wicks, okay, and it gives you an indication of whether the structure is genuine or whether it's just indicative of market volatility. But anyway, I hope you've enjoyed this video, folks, and I will see you in the next one, which will likely be made tomorrow. Have a great rest of your day.